Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 29th of May, 2020. This is episode number 1765. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. It's been a heck of a week, short week, but a very busy one. This morning, the leader is gold, up $14.90, trading at 1743 and 20 cents, up 0.86%. I want to remind everyone or let you know that the U.S. Treasuries have rolled to September 2020. That is the U20 or U0 contract, so ZBU0, ZNU0, whatever. Make sure when you roll that you've reloaded your data if your feed actually adjusts for rollover. This is based on just an official roll. It's not based on volume shifting or anything like that. But this is the official roll day for U.S. Treasuries. The laggard today is crude oil. Crude is trading down 82 cents at 32.89, off 2.43%. The indices are lower this morning relative to yesterday, but really not by much. I mean, the DAX is off 1%. The Russell's off 0.94%, down 13 points. The Dow is down 0.75% or 191 points. The S&P is down 15.5 points or 0.51%. And the Nasdaq's off 10 points or 0.11%. That's where we stand this morning. Allocation is to safety as it stands here. And a nice sell-off yesterday. Started at around 30.60 or so in the S&Ps and culminated in a test of 30.1950, that key 30.19, 30.20 level I talked so much about yesterday. We'll go over that in a minute. In terms of what was released overnight, what is going on here? Quite a few numbers came out from across the globe, Japan consumer confidence, and so on and so on and so on. You can look those up yourself. The U.S. released its personal spending month on month in April, came in slightly worse, negative 13.6 versus the expectation of negative 12.6, or the consensus of negative 12.6. Personal income also was released, came in at positive 10.5%, with a consensus at negative 6.5. So less spending, more income. I guess that comes from staying at home and not consuming, huh? Wholesale inventories also came out for April. Wholesale inventories came in at plus 0.4. Forecast was negative 1.4. Higher's worse. This morning we get Chicago PMI for May. That number is a private number released early to members at about 8:42 Central, 9:42 Eastern, and to the public at 9:45, 15 minutes after the open. The expectation for Chicago PMI is 40, and it is likely to be a mover. And then at 10 o'clock, we get Michigan consumer sentiment, but this is the final figure, generally not a big mover. And then that pretty much wraps up the day, except for at 11 o'clock, we get Fed's Chair Powell speaking. So we'll see what that's all about. We're going to, he's definitely going to comment on the economy. So that's likely to be a mover. So pay attention at 11 o'clock Eastern, just a half hour before the European close. And then there's a press conference scheduled with POTUS, not showing an exact time yet. If you know the time, you can maybe type it in. I'll announce it. But seeing that there's a press conference on deck today with POTUS. So key things to pay attention to: PMI 842, 9:42 Eastern, and then really it's Powell at 11 Eastern, and then whatever else POTUS has to say. So that's where we stand. Let's take a look at what we expected yesterday versus what we got. Yesterday we were looked like we were opening right on top of the 3043 naked point of control. And the expectation is for the market to open sideways, pop higher, and fall to 3020 right here. You can see the number on the right. By the way, if your screen is kind of not clear, just click on the settings and switch to 1080p. If your feed can support it, it should already be doing that. And then following that, expected a pop back up into 3036 once the 20 was hit. The secondary scenario is a push to 3057, 3060, and then a drop back in. What the S&P did yesterday, now remember, scenario one, little pop higher, down to 3020. Scenario two, a small dip, and then a push into 3060 or so. That's what was expected. Here's what we got. Very interesting day yesterday. What we got was the little drop. So we had basically scenario two playing yesterday for most of the session. We had our little drop into the range as expected. Again, here's scenario two, little drop into the range. Okay, down below 3036, and then I was looking, and then it starts to roll back up and push higher. The target on scenario two was right here. It ended up pushing to the next level up at 65.50. Before I started seeing clear divergence in the way it was trading that high. I had not seen, I'm going to try to get you the image here from our head trader channel. This is a beauty. Had not seen one laying up like this in a while. Here it is. So I'm going to grab the image. Sorry, I just need to open it. Here it is. This is what I posted yesterday. You could see that once it pushed above the 3060, you can see that it was starting to falter, right? Starting to get these negative deltas and higher prices, and we're starting to see that the buying which took place earlier, price and delta went in the same direction. However, the delta lost half of its value once this bar closed on this little pullback, and from there, this consolidation was really starting to invite negative delta in. And then as we pushed higher, we had negative delta on new highs, negative delta on new highs, negative delta on new highs, starting to roll over. And then once it breaks lower, now we're looking for a pullback for a short. That's what I discussed yesterday. And that ended up being the pretty much the top. This is this area right here. That ended up being near the top. And then, of course, as I discussed in the morning, the target would be 3020, especially if we get back into the range. This green line here was prior day's high. Once it falls below the green line, which I don't know if it will, once it falls below the prior day's high at 3036.75, then 3020 is on deck. What we ended up with yesterday is we broke the IB high. So we had range extension up. We had a pretty much a normal variation day. And then we broke the IB low. So now the question is, do we close near the lows outside of the IB? And if it closes outside of the IB, it would have a neutral extreme down, and this is likely to precipitate into further selling, further selling to the downside. What this did, though, is it lingered here near the lows, right into the cash close, and then it ran back up into the opening swing inside of the IB, almost to the mid. So we had a neutral normal day. If you look at the profile, we had multiple distributions yesterday. I mean, the market has been really doing a good job in price discovery throughout. So again, the top of scenario 2 right up here and the target of scenario 1 right down here. And having those plans, having those scenarios is the reason, is really why we want to the reason we have these scenarios is to help us hang on. There's the top at 3060, the bottom of 3020. It's once the market starts doing its thing, we're not quickly bailing on the trade because we can see that there's a path. There's a very, very likely path, and those are the lines that I'm drawing here every day. Okay. It doesn't mean it'll always work out, but having a plan is better than not having one at all. So that's what happened yesterday. Price discovery profile, neutral day. And now let's take a look at the overnight session. The overnight session, had about 386,000 contracts completely balanced. Remember, I said this yesterday. Yesterday we also had, the overnight session from yesterday. Showed a balanced profile. What does a balanced profile look like? This is from Statistics 101. A normal distribution of a population looks like this. The first standard deviation is about 68.2% of it, something like that. That's the first standard deviation. The second standard deviation is out here. Third standard deviation is out there. And these describe a normal distribution. This is when the market is in balance or the data set in a statistical sample is well distributed or Gaussian. Lots and lots and lots of terms. Not trying to sound fancy, but I want to make sure everybody's kind of following along. And in general, in nature, we don't get that. We get fat tails a lot. We get this kind of distribution, or we get this kind of distribution, or it goes the other way. We could have a distribution that looks like this, or a distribution that looks like that. And many, many days, because we're trading real life in the markets, not some textbook, even if it's on market profile. In real life, the fact is we get a very odd shaped distributions like this. And what's important to us is to watch where the volume is distributed to see if we have a Gaussian or normal distribution, or if we have what we had yesterday, the serrated knife kind of distribution that tells us the market is actively discovering. I mean, look at this 15-minute chart. Look at the tails on this 15-minute chart. Lots and lots and lots of tails on the way up. Every attempt lower was pushed up, and then as we finally topped out, we get the quick move down. Thanks to news, and then and so this is the first thing we're looking for when we're looking at a profile. Again, just to make things simple for you to look at. Let's remove everything else. And that's what you have. You have this normal distribution profile overnight. You have a market that's basically saying, okay, we found an extreme down here at 3011. Remember, very important level down here at 3008. And then it pushes back. What's interesting here is it doesn't test the opposite side. The ideal situation is the market opens, establishes a low, and then it tests the extreme. It goes and takes out that extreme, tests above it, finds the sellers, then it comes back, and then you end up with a price action that looks like this and a distribution that is very normal in nature. And the more it trades in the middle, the more kurtosis we have, where it starts to get really compressed, which can help us determine that how likely it is to break out of here. So the overnight distribution is normal below. The point of control shifting down in the overnight session The point of control shifting up from the prior session, higher high, higher high, higher low, and then we're holding steady here. The overnight session is simply telling us that it's not able to test higher. And if you recall, yesterday the overnight session said pretty much the same thing. Let's bring everything back. Pretty much said the same thing, where we had a normal distribution with a negative delta coming into the session. The delta was negative. So same here, except this time we have value moving lower. So right now, as it stands, the bias is for lower from here. That's the conclusion. Looking at the heat map, here's what the overnight session looks like. Lots of overhead. Remember that 30-36 area that I was just talking about, 30-36-75. That 30-36 area has really nice liquidity up there. This is that prior high that we battled against yesterday, and it's well offered. The market had moved up into it, hit a collision at 30-35 and failed. Put in a lower high. This sets up a scalp short. This is a classic scalp short here for me. Collision, pull back, lower high. Look to get short somewhere in this range here and look for a break of these lows. For continuation, look to the next zipper right down here. For targets, once the next zipper gets taken out, then this becomes your risk control. So the expectation here is that if it gets back above 30.2650 or so, then the short is done. But what helped this trade on the short side is the liquidity above and the fact that it held on a test. So the overnight session's been fairly active. I mean, the volume is not all that great, 386,000, which is relatively high, but not as high as the prior session. And what we have is a market that is completely bookended with liquidity. We have liquidity above. Okay, so this is another indication of balance here in the overnight. Orders are stacked above, orders are stacked below. Of course, the 3,000 level is going to have a lot of liquidity there for the options players, hedgers, and so on. And then above there, 30.50 has some liquidity. That's how things look. One last thing, just to look at participation. I'm going to show you the delta chart versus price, the delta breakdown. The top pane, this is the S&P up here, and the bottom is yellow, 100 lots or greater. Orange is 1 to 9 lots, and the white is 10 lots to 99 lots, consolidated, rebuilt. And yesterday, the large lots really controlled the auction, really controlled the overall delta. And what's important to note here is, as price was moving up above the zero line, the delta was really struggling. The overall delta is represented by these candlesticks, and you could see that it just could not get above the zero line. The zero line is this dashed line, and as the market pushed up, it just could not get it done. You could see that large lots were mainly flat. Small lots were doing the buying on the way up, but large lots were selling, and they ended up conquering, right? And they often do. Large lots, the 10 to 99 lot group tends to drag the market around more so than the 100 lots or better. These guys kind of interact. Generally, the yellow line interacts very heavily at the open and at the close. So market on open, market on close. And so this is important to note that as yesterday moved up, the delta was not with it. The delta barely crossed the zero line. It's just unable to support the price action, and this is an additional indication that longs were in peril. And then, of course, it set up that chart that I just showed you This one set up this chart that I just showed you where it starts to move up and it's just having a hard time mustering up positive delta on the way up, and bang, there's your short to initiate. Of course, that's not a recommendation to trade, but that's the short to initiate, and then off to the races we go. Wow, I have really made this one really long. Apologize for that. There's just some really good action here yesterday. So let's move on to what we're expecting for today. This morning, my PC is so slow. This morning, we're opening right at that 30-20 level. This is a really important area here. This is when you combine these profiles. Let's draw a composite. When you combine these profiles, this becomes your key low volume node. See that? This is your key low volume node for the volume that's in the upper distribution versus the lower distribution. And we're opening right at it. This is really an important test here this morning, and it could go either way. It's really a coin toss. We're opening right at the low volume node. I'm expecting it to move away relatively swiftly after an open auction. The expectation is it's likely to respond back up, looking for a response as far up as 30.36, but I'm looking for this to falter, come back to the open, and finally get the black line, which is the composite point of control of 30.11, which happens to be, what a coincidence, happens to be the overnight low. Looking for the overnight low. 3008 is a key high volume node here, and then it might dip below for a bit before it bounces out into the weekend. This is the primary scenario. Test up, fail to continue, and then roll over and play dead below this low volume node at 3020 and push as far as 3002, maybe even 3000 before the session ends. Secondary is an open auction. The opposite moves down into the MC point of control, consolidates here through 3008, tests below, and then finally impulses up, comes back in to the 3020, and then squeezes higher into the prior range, yesterday's range, to rest somewhere below 3050 into the close, but testing as far up as the 3050 up here. This is 3050. Okay, so that's scenario two. Sorry, I'm losing control of my mouse. So that's what we're looking at for today. Of course, Powell may push into this, the PMI may push into this, but overall, this is what I'm looking at for today's plan. Okay, good luck. It is Friday. Make sure that you're waiting for the trades to come to you. Don't go inventing trades. Let the market kind of tell you almost very, very clearly what it wants done, and then hop right in. Good luck, and remember, if you're not managing risk first, then you're just gambling. Hopefully, you've done well this week, this short week, and we'll come back Monday and catch you here. Good luck, and I'll catch you on Monday morning. Take care.